Good morning.
Hi. Chat is open. How's
Yeah,
my people doing? How was that monthly meeting last night, you guys? That was so good, guys. The monthly meeting last night, if you were not there, I'm like literally gonna have a heart attack just thinking about it, but like I'm gonna get the replay up for y'all. So please check out that replay from last night. It was so good. Oh, thank you, Rick. Thank you.
yeah.
Yeah,
Here's
here's
Megan,
Megan.
rock star.
She is a beast. I love her.
That's it.
Yeah.
That's it. You know what? I'm so excited I'm standing up to talk to Josh today.
Let's
This is
go.
not sitting around anymore.
Good
I
to be
know.
here. Looking forward to our conversation.
Yes. We'll get started in just a minute. The people are here. They're on time. Welcome, guys. Good morning. Happy Thursday. Wow.
Happy
Look at
Thursday.
go.
You got it. I know we're bumming. Those Panthers lost yesterday again. What are we gonna
Ah,
do? What are we gonna do? You guys were
I
watching some
wasn't gonna bring it
basketball.
up. We got to give a full recap. So.
Yeah, exactly, Josh. What we do here is we not only interview people, we talk about real estate, and they get their daily dose of sports
Little sprinkle in
right
there.
here. And if our home team wins, we always got extra surprises. If our home team doesn't win, no surprises. Only winners here, guys. Only winners. Good morning. Good
Fail
morning.
forward. Fail forward.
Some of you guys, this is day 3 of seeing Alexa, myself. Gosh, it's morning, evening. You're going to see us everywhere in your dreams. We're everywhere, guys, everywhere.
No, I hope I just,
Hi,
I just gotta let the
Michelle.
people know. You gotta let the
Yep.
people know what's going on. Hey, Ruby. Hey, Michelle. Hey,
Yeah,
Farrell.
where are you guys listening in from so that we know?
Oh, we got Gabriel in here, our newest member. So happy to have you,
Welcome.
Gabriel, your fellow Jersey-ish.
That's
Allison.
right.
Oh,
Jersey in
thank
the
you.
house.
Bijal. Oh, love to have
People,
you.
one of
Love
my favorite people.
Love it.
I got to watch
Miami.
out. She's a former, no, she still is an attorney, so I always have to give my own disclaimer before we start to be in compliance.
Wow, Miami showing up. Let's go.
Ramon, what's up, Ramon? I haven't seen you in a bit.
We got Boca, of course. Carl, he won the raffle last night. Congrats, Carl. Love
Uh,
that for you. All
Miss
right,
Palm, I know
guys.
Bejal's in New York.
Love it. Okay, guys, let's get started. All right, we got lots to talk about today, and I have a lot of updates for you guys. Not a lot of updates, but we have a lot going on, so let's talk about it. But welcome, welcome. Good morning, everyone. Thanks for coming on our webinar today. This is BPM RIA, Broward, Palm Beach, Miami-Dade Real Estate Investors Association, your only local and approved chapter here in South Florida that is partnered and in compliance with the National Real Estate Investors Association. We're so happy to have you guys on today. My name is Alexa, COO here at BPM RIA, and I have some awesome guys in the virtual building. We have Anish Dave, our CEO, as well as Josh Siegelbaum. He is a real estate advisor and principal at the Siegelbaum Group, and we're going to have a cool fireside chat and get inside the mind of the strategic investor. So we have some upcoming events for you all. You all know this. We got lots going on. Oops, sorry, skipped it right there. We have lots going on. Please go to the website, get on there, search through the different pages. I have several pages of upcoming events for you guys on bpmreia.com. Go click that upcoming events tab. We have 2 webinars next week. We have our boot camp next week, our in-house boot camp. A lot of you guys in the chat here are signed up. I know a few of you guys are going to be on the August one. So please don't let it miss you. Don't skip this one. If there's any way you can make it happen this next weekend, please go. You don't want to wait till August. Like some of my people that I love you guys. I know there's nothing else you could do, so don't worry. I got you in August. So next week, we'll see you for those 2 webinars. Please join us. Raffles, last chance to win a free seat to our 2-day quick start. I'm just going to tell you guys here because you're on time and you're here at the webinar and you're in here. So I'm going to tell you this right here, May 13th. That from 11 to 12:30, that will be the last chance to win a free seat for a 2-day quick start. We've been giving out free seats. We're doing everything we can to get you guys in this boot camp training. This is our in-house 2-day boot camp. You can't miss it. It's absolutely incredible. So we'll talk a little bit more about that. But Anish is doing, or we have 2 Next Million Mastermind webinars. Anish is doing this one, and then Sean's doing this one. They're both phenomenal. You guys have to show up to all these webinars. They're free, live Q&A, live chat. You're not going to regret it. And then we have another cool fireside chat here. We have a special guest, Chad Bacrato. He is an attorney. We're going to have Advanced Tax Advisor founder, Jose Ramirez, as well as Anish. They're going to do a fireside chat on trust and asset protection for real estate investors. So I'm excited for that one. But
And
you guys,
I just want
yes,
to,
Anish.
just so the dates on that one, that's May 29th. I know it says May 8th.
Oh gosh, thank
29th,
you
just
so
so you guys
much.
know. It's free. And then also our 2-day quick start is full days, guys. It's 9 to 5:30, not the
Oh
other.
my God, I had the times wrong there too. Guys,
Yeah, so we're all
please
good.
go to the links in the chat. I love you guys. Please, you know I'm not perfect. I'm a human. So go to the link in the chat. Also, get on the text list. I've been sending text reminders for all of these events, including the 2-day quick start with the link in there. Make it super easy, reminders. All you need to do is text the word BPM REIA, all one word, no spaces. Leave out those little quotation mark thingies to this phone number you see on the screen, 954-800-6961. That is our event line. Please don't call that number. And you will get all of the updates for our upcoming events straight to your phone. Super convenient. Absolutely love it. Details are in the chat for you guys. So get locked in and don't miss any upcoming events because we have a lot and we will be taking, little breaks here and there as we have little vacations, conferences, things going on. So you just want to get in the loop and make sure you don't miss anything. So 2-day quick start, just to recap with you guys, don't want to bother you guys too much on this, but I have to because this is a limited training. When I say limited, I mean we only have 4 of these per year. This is going to be full days with us, like Anish mentioned, all day Saturday, all day Sunday. This entire training is led by Anish, so this is going to be the most consecutive time that you will get with him. You want to be there. Trust me, you're going to get a lot of time with Anish. You're going to learn everything that we're doing in our coaching program as much as we can possibly cram into those 2 days. We're going to talk about wholesaling, flipping, rehabbing. We're going to have 4 incredible guest speakers. We have Kevin Thatcher, the owner of Independence Title. We have Francisco Mago, the owner of ReaFax, the deal finder software we use. We have Jose Ramirez, our chief tax strategist, as well as Carl Sheely, our primary contractor. And Anish is leading the entire thing. He's added creative financing stuff. He's added AI stuff for you guys that are I just learned that some of you guys in here are scared of using AI. No judgment, but let's address that. Let's get to it and let's do it in a safe environment like this training. It's going to be on Zoom live. So cameras are going to be on, microphones are going to be on. It's not going to be like this webinar. It's going to be highly interactive. And I highly, highly recommend you take it if you have not already. And good job for all of you guys that are already locked in for this next one. I really commend you on that. And everyone that's taken it before, you guys know what's up and you can put it in the chat if you've attended this training and you recommend it to other people. So feel free to do that so that these people can see what's up.
Yeah, and we only have less than 5 seats left, guys. So
Oh
just
yeah,
make sure
we're
you're
closing registration soon. We have less than 5 seats left, so take action now. And that's including the 1 free raffle seat that we're giving away next week. So members, as you know, you get all the goodies. You get a discounted price for the 2-day quick start. You get member pricing, which is $4.95. You get the whole national rate of benefit package. That's discounts to Home Depot, Office Depot Business, Rent Perfect, Millennial Insurance, our Gamma Plan, Self-Directed IRA, Avis Budget, so many different vendors, you guys. So if you don't have your memberships, go get them. You're definitely going to want to get it before our next quarterly meeting so that you can get in for free for that networking meeting, and your guests can come in for a discount of $10. So go get your memberships now and start getting access to your benefits and get in the member portal, member flow. You can access the member directory and all of our amazing vendors in there as well. So one-on-one coaching and mentoring here at BPM RIA. Some of you may know that this is available, some of you may not. And for anyone that is curious about what's going on in our coaching program, you should be, because we actually put up 100% of the money for our students' deals and split the profit 50-50. So in your match with your own personal mentor, we include everything you need to get started and doing deals immediately. So go book your discovery call. This is where I will get you the brochure of everything we include in the program, as well as the pricing information. So go, go, go. I can't wait to chat with you guys. I know some of you guys are already booked for today, tomorrow, next week, and I am really excited to connect with you. During this call, I will be more than happy to schedule your free consultation with a mentor so you can get in even more nitty-gritty questions answered on your specific situation. So I'm excited to speak with you guys. I know I have some calls booked with some of you on this call right now. So I really look forward to connecting with you and seeing how I can help you get to your goals. And our team is phenomenal. So here's the third-party funding that we have available. This third-party funding is available for you guys. All you need is a minimum 620 credit score, $35,000 verifiable income. It will be a soft credit pull, and you will get the response within the same day as long as you do this during business hours. So if you prefer that I email this over to you, my email is in the chat right now. I'll be putting helpful links in the chat for you guys throughout today's session. But I do always want to take a moment to thank the National RIA for everything that they provide. Cheers to 40 years strong. Go National RIA. They are the best. And also want to do a quick shout out for all of our vendor partners on the website. Please, guys, go check them out. They have amazing customer service, amazing referrals, the best that we can, like the best ever. They've been around for so long. They're very knowledgeable and they're very loyal. So they're there for you guys. Please get in touch with them. Go check out National RIA's website as well. Do some research in National RIA's website. They have so much education and resources in there, legislative updates, all sorts of helpful things for you guys. If you're not in touch with real estate investing today, get in touch with that. So many resources for you all. But just so you guys know, we are recording today's session, but we will take questions. So go ahead and put those questions in the Q&A box that you see in your Zoom menu. It has a little Q&A question mark button on there. So make sure you direct your questions in the Q&A, and I'm sure we'll be chatting with you guys in the chat box. So check out the chat box for our helpful links and anything that we might be chatting about in there. So that's it from me. I'm excited for these guys to tell us what is inside their minds, because you guys are both real estate investors that have been around for a while, and I just need to know what's going on in those brains.
So thank you, Alexa. And indirectly, I think you just called us old, but
No.
thanks so much. Being around for a long time. So I do see some new names here. My name's Anish Dave, CEO BPM RIA, the only approved chapter here in South Florida with National RIA. My background, I've been a real estate investor for, gosh, now I am old, 25 years, almost pre-internet, definitely pre-social media, and made a lot of money. And then I got crushed in 2008. Lost everything and rebuilt myself. So what I'm really excited about is having Josh today. I've known, gosh, actually our paths have crossed, I'm going to say at least 6, 7 years ago, somewhere around
Yep.
there. Am I right on this? Around there. And I'll let Josh give his background. And we reconnected in these last couple of years through mutual friends, including Carl Fisher from Gamma Plan. And yeah, just super excited. I've been going to his events, and it's been pretty amazing. And we've been just chatting on the side, and I was like, you know what? We should chat online and really explain what's going out there. So Josh, you want to give a quick background of who you are?
Yeah, of course. Thanks, Anish. And thank you, Alexa. It's really nice to be here with everybody. And as Anish mentioned, I've known him for over 5 years now, about 7 years to be precise. I moved to Florida back then in 2018 with my wife, and she was associated with the RIA when we first moved here. And her and I have been investing in real estate together, starting in New Jersey, but then here in Florida as well for coming up on 10 years. Not quite as long as Anish, but in other capacities. We invest on a personal level in rental property, and we also buy and reposition luxury residential homes for ourselves and our clients. I run Ziegelbaum Group with my wife and business partner, Carla Ziegelbaum. We do luxury residential brokerage in Fort Lauderdale and the surrounding area. We also niche into property management and other services that our clients need. So we meet the needs of high net worth individuals specifically. That's kind of our niche on the residential side. Prior to that, I've worn many hats professionally over the last 10 years. Prior to this and starting Ziegelbaum Group a year ago, I was a director of investor relations at a real estate private equity firm where I onboarded capital from investors, acquired farmland, and I managed communications and capital commitments for the fund. And I did that for about 3-4 years in several different roles as VP and director. And before that, I had a corporate job at Wells Fargo. I was a private banker, Series 7 license. I was a loan originator. So I was doing full balance sheet banking for high net worth individuals. So really been catering to that segment of the market for my entire professional career, but in certain different capacities, first as a banker, then as a private equity executive, and now, of course, running my own residential firm here in Fort Lauderdale. But I also, the organization Anish mentioned, it's NSOSI, it's the National Society of Strategic Investors. I'm a founding board member there. It's an organization that meets right now on a quarterly basis. We have an event coming up in June in Palm Beach, but it's geared for accredited investors. So it's geared for high net worth individuals and service providers to them, where we meet and share ideas, share connections with one another, and find ways in which we could be more successful in our personal lives and in our business lives. So I've been involved in that over the last year with Carl Fisher, who's part of RIA, and Nish has been coming to each of our events. So looking forward to doing more of those and adding value to the community. But it's really fun to just be here and bounce ideas and topics off of one another on what we're seeing in the market. And so that's a background on me. And
yeah, absolutely. And you guys know we've been doing these fireside chats. I don't prep our guests at all, so they don't know what they're gonna what they might ask, what I might ask them, or the Q&As that you guys. First of all, I got to tell you, when Josh got on, I was like, really? He's going to wear a jacket? I mean, right away, I knew it was private equity. I was like, if I had enough time, I would have changed on that because I feel underdressed in general. But I was just giving a hard time on it. But we don't know if you're wearing pants, so I'll leave that on your own.
Shorts.
You don't need to know that, of course. So you know what I'm interested in is, right? Your background went from banking, private equity, and now you're in real estate. Like, what made you switch? Because I was in banking also, right? And I was thinking I wanted to get into private equity, and like that's where all you hear private equity and you think big FU money, right? Like for everyone involved. And what I know, it's not everyone gets that kind of money. So what made you go from the banking to private equity to what you do now?
Yeah, really good question. Let's unpack that. So I got into banking because I studied economics at Rutgers in New Jersey. So it was a kind of simple transition out of school to get into corporate, get an entry-level job. So I was fortunate enough to kind of climb my way up the ranks over the 5 years that I was there, ultimately to that private banking role. And in that, and in service to the high net worth individuals, I noticed so many parallels with all of my clients that were coming in and doing large wire transfers, or at least receiving large wire transfers. It was all for real estate, go figure, right? And often they weren't borrowing money from us, even at the bank, right? They were just moving money through the bank to buy real assets. And I was envious of these people at the time. In my early 20s, I'm wearing a suit, I'm sweating. This guy comes in shorts and white sneakers. He looks happy, he looks rested, and he's like wiring out 300,000-400,000. I'm like, what am I doing here, right? So obviously, you have to start somewhere. But I started just noticing, right, in service to high net worth, everyone is either a business owner or a real estate investor, or both, actually, almost in all cases, both. In some cases, the high net worth people that I was servicing, they were doctors or lawyers, but that was like a small pocket. The overwhelming majority real estate investors and business people. So I started asking questions to them and to myself as, what do you do? How do you do this? And it just really started to intrigue me at a young age. So I bought my first home shortly thereafter. Being in banking, I was like, oh, I have access to financing. I could buy something with 3% down. All my clients are doing it. So I scraped together some money from my 401k and bought my first distressed property in New Jersey with my wife, Carla. We bought this house in South River. At the time, it was like $150,000. So we bought it with like $5,000. It's like pretty funny
That's
situation.
funny. South River. That's, but on a side note, obviously I'm from Jersey too, but I lived actually in Old Bridge, like 15 minutes away. So I know South River. So now we
Yeah.
can talk Jersey talk. We could talk fast.
Yeah, it's a
Smack.
sleepy little town outside of New Brunswick. It's not
Yeah.
anything that you would want to go to unless you kind of lived around there, but it was close to my office because I worked there in East Brunswick at the time. So we bought this place. I was at the bank. I was still kind of felt like something was missing. I was a little unhappy professionally, or slightly, I felt good about what I was doing, but I wasn't like fully fulfilled, right? So I had a friend down in Florida who was my counterpart. He was a private banker at Wells Fargo, but he was in Miami. And he was telling me, I was telling him stories about my clients. He was telling me stories about his. Basically, take all the numbers that I mentioned to you in my example and multiply it by 10 is what he was seeing flowing through him at the bank in Miami. And, he's like, oh, there's tons of opportunity down here. You could start over.
What year was that? Just out of curiosity.
It was 2018 that we moved.
Okay.
Right.
Yep.
We bought that house in 17, and then it was 18 that I had this opportunity to move. And that shortly after you met Carla, actually, because we moved down here because I got a corporate transfer with Wells Fargo. I took the same exact role, but in Surfside, so Miami Beach office, a lot cooler than the suburbs of New Jersey. But I was still wearing a suit and I was still servicing wealthy people. Only this time they were even more wealthy and they owned even more real estate than before, right? So
Yep.
I'm starting to, those parallels that weren't just in Jersey. It was like the same thing here. And
the weather's a little bit nicer.
They're even more relaxed and shorter shorts and all that stuff, right? So it was it's a pretty funny dynamic. So I came down. I thought like the change made me happy. I love Florida, right? So we moved down in 2018. I was already a proponent in home ownership. So the first thing we did when we sold the house in Jersey is I bought another place here with 5% down right off the get-go, right when we moved. Yep. And it was in the suburbs, in the area where my banker friend lived, out in Davie at the time before I moved to Fort Lauderdale. So I was commuting to the bank. I was still working at Wells Fargo, and I was getting more unhappy because of the situation that I said. So I just started searching and seeing what else was out there. I never really did that my whole time at the bank. I just sort of climbed my way up. So after a year and a half of being here, so end of 2019, I was searching online. I found a firm. It was a job posting out of Medellin, Colombia, actually. And they were looking for somebody in Miami to be a VP of investor relations. And so I read the description, and it was like a lot of the things that I was doing, right? Like meeting the needs of high net worth individuals, liaisoning with them, raising capital for certain projects. Granted, I didn't specifically raise for projects, it was for the bank, but kind of similar, like managing the flow of funds as I did before. So this was going right into COVID. It was like December 2019, January 2020. I decided at that time to leave my corporate job like in the month before the shutdown, basically, right? And I started this remote position right when everyone was going remote, but right before it was kind of funny. I got this remote job, and I was tasked with raising capital for hospitality development projects. So the fund managers in Colombia, they bought some assets in Puerto Rico, on the island of Puerto Rico.
Okay.
And we were trying to fill out the equity for that deal. And this was right in January 2020 when the world shut down on hospitality.
Yeah, March was COVID.
It was tough, yeah, right? So you can kind of see where this was going.
Great time, right?
So 2020, I started raising capital for a hospitality project. That was my first deal. We raised, I think, $0 in the first 6 months of that year, right? Like literally zero. And there were people on the team that were raising right before that, before I joined. So it was like really rough beginning in private equity for me, right? I was like, wow, this is tough. People don't want to invest, but a lot of that was macroeconomic, right? Among other things. Yeah. So the team that I was working with, they had these projects going on in Puerto Rico, but they also had things in Colombia that they were focused on. So two of the partners had a coffee development project in Colombia that they were doing in tandem to this hotel deal that I was working on. And when things kind of came to a halt in 2020, the company kind of split. And two of the partners decided to focus on this coffee enterprise in outside of Medellin, in which they were raising capital from U.S. investors, but instead of buying hotel developments in Puerto Rico, they were buying coffee farmland in Colombia
Is it
at scale.
coffee or no, I'm kidding.
Actually,
And
coffee.
guys, just so you guys know, some of you guys know, I am married to a Colombian from Medellin. So when I say coffee, we're really talking about
It's
coffee.
real coffee. So yeah, so in case anyone was wondering. So we had trouble raising for that hotel project, right? But we pivoted at the end of 2021. They brought me in. So instead of being a VP, I got a director title. And at the time, the coffee fund had 10 million in assets under management already. So I came in, they already had some traction from a seed funding round that they did.
Yeah.
And there was under 100 investors, 10 million raised. And the partners set out to do a $25 million funding round. And then more from there, right? So kind of to consolidate it, I was with these guys working remotely from Florida, raising capital for the coffee fund. We grew from 10 million to 65 million in AUM together over a 3.5 year period. This kind of takes us into the beginning of 2024. And then at the time,
I got a question for you, just because I wanted to ask you before. What do you define as high net worth? I'm just curious because everyone's got a different definition. Put in the chat what you guys think high net worth is in your eyes, because I'm curious to see what you say versus what I used to think. Let me rephrase it.
Yeah. So interestingly enough, so just to unpack private equity funds in general, a lot of these deals are restricted to high net worth individuals. They're also called accredited investors, right? So an accredited investor is technically defined as someone that makes 200,000 a year or more in income, or 300,000 or more if married, or they have a net worth of 1 million or more, excluding their primary residence, right? So you can't be like I bought my house 20 years ago and it's worth $1 million and it's paid off. That does not make you accredited, unfortunately. It's excluding a primary. So 1 million in net worth or 200K in income. Really not incredibly high net worth in today's day and age, right? Because those metrics actually haven't changed over a very long time. The figures haven't moved.
Since, I'm thinking like I don't remember it changing in for a while. I remember when 1 million was a lot. Let's say, right?
Now,
in South Florida, or mostly, at least in our part of the country, 1 million is like I joked about it. It's like if I had $1 million one day, now you're like, what? I mean, I could barely get anything, on that end of it. It's a fixer-upper for 1 million, and we'll talk about
so it's really for you. These are everyday people, really, at the end of the day. It could be an engineer that makes 200,000 or more. It could be a lawyer. It could be a physician, or it could be a business guy. A lot of the people we were working with are business owners in their own right, and real estate investors. Go figure. And they're looking to diversify into other asset classes and things like that.
Absolutely. And just out of our audience, put in the chat if you guys are working a W-2 job, because I'm just kind of curious. And my question to you, Josh, is, I mean, I'm not going to say a cushy, like banking, and you're now in this, it's cushy for you to, I don't want to, what's the probably easiest way to give it up? Meaning, now you're in the entrepreneur, world. How did that feel? I mean, you're married, right? I don't think you had, did you have your first one yet when you left?
No, my son is coming up on 2 years old.
Okay.
So when I left the coffee firm, it was like right when my son was born, really. That's when we decided.
So like, you want to talk about what that looked like? Obviously, you've only been in South Florida for this much. I think Carla was still doing real estate full time, right?
Yeah. So
right. So it's still like, for all you realtors out there, we always have realtors on here. I'm a licensed agent too. Josh is too. When things are good, they're good. When things aren't good, they're not good. And what I mean by that, there's no guaranteed money. So now, your wife's working, and it's not steady money, I'll say, right? Like, there's some, one day you're the best realtor in the world. The next day, you can't do a rental, right? You're just like, I don't know what's happening on this. It's not that you're smarter or you're working harder. It sometimes it's the market. Sometimes I always say there's even a little bit of luck. It just depends on that end of it. So how did that feel? Like, what did that look like for you?
Yeah.
Because being married or having a spouse. And the reason I'm saying that is when I became an entrepreneur, it was probably, it wasn't probably, it was the closest people in my life that said, "What are you doing? You got a nice cushy job, worked for them, worked for the banking, because I was in banking
Yeah.
too, worked for them for like 20 years. You got your 401k and you're so lucky you get those legal holidays off, right? As bankers, like really? And then you get your 2 weeks. So what did that conversation, and here's the best part, so you guys know, Carla's actually listening in. So make sure you keep it clean and we can only say nice things about her while she's listening in.
So I've seen even though we've started Ziegelbaum Group about a year ago, like as you mentioned, Carla's been an agent for coming up on 8 years. Even when she was with the RIA, she still held her license, and then she worked at Compass for the last 5 years under a top producer here in my market. So in her time there, under this luxury residential kind of powerhouse in town, we really started to realize the opportunities in our market, right? So of course, what we were doing with coffee and what I should say the principles of that firm were doing was miraculous. And on a global scale, they found their niche, right? But I was trying to find something where I could really grow in my market, and where is the demand here in Florida, right? Like, or specifically in Fort Lauderdale, right? Like, where's the movement of capital? Where's the business opportunity? And you notice like a lot of the wealth that's here, it's people that have wealth elsewhere, right? The people that are at least living here. So there's a lot of capital flowing here. And what
Yeah,
you'll
it's like their second,
find,
like what I've noticed, it's a lot of time it's their second or third home,
yeah,
generally
and
speaking. They're up north, they're in Chicago, they're
yeah,
overseas, the amount of overseas money of, loving South Florida.
yeah. So I over the last, since she's been at Compass for the last 5 years, I've been in awe at the size of these transactions that are running through the office there. You're talking anything from under 1 million to over 5 regularly, right? That the offices on Los Olas Boulevard are pumping out, like a lot of the deals that are going on here. And then I noticed like, well, who are they servicing? Oh, wait, they're servicing the same clients I've been servicing. But these clients live here. Oh, but the clients here don't want to invest in coffee. What? Go figure, right? Like, the people that are
Yep.
in those obscure private deals, they're all over the country. They're very specific types of people that invest in private equity, that they're in the illiquid asset classes, are often in multifamily. They often already own a bunch of homes. They're in the stock market. They got a bunch of cash. And then they're looking for something different, right? But if you go and you can't find that type of person on the street, they're in like very specific groups for accredited investors who are looking for private deals specifically, right? So I
Yep.
was trying to find something that I could do business in my community and be a leader in my community and service the people here. And it was not possible through what I was doing, right? So I'll kind of start with
Hmm.
that. I wasn't a founder at the private equity firm I was at. I was kind of given an opportunity to participate, but often not being the first person or not being the founder comes with its challenges, when you're looking into entrepreneurship, right? So it often makes
Yep.
sense to pivot and just start it yourself in certain cases. And you might ask, well, why don't you start a private equity firm? Well, I have intentions to take my experience from raising capital, structuring deals, and really applying that to real estate in South Florida and doing joint ventures or potentially private placements for larger deals in the future. But absolutely intend on continuing to work with high net worths on a capital raising basis, on a deal by deal basis. But as of
Hmm.
now, we're really building our core operation, which is residential brokerage services, right? And then we're starting to build out things like property management and lending, and then of course soon to be development and things like that, probably with other partners, right, that are more seasoned in the area.
Yep.
Because really doing private equity is a team sport, where there needs to be an operator that's really executing on the investment strategy. And for that person to be the investor relations person is very unrealistic, right?
Yep. Yeah. I've
They
won
partner
those.
with one usually. So
Yeah. Agreed. Oh, hey guys, if you guys have questions for Josh or myself, remember, pop them in the Q&A. This is all about you guys too, so it's not just what I'm interested in, it's whatever you guys are also interested. I'll go ahead and ask Josh those questions. So you know what's kind of funny is even in the private equity end of it, or even on the real estate, and we'll talk about the market too a little bit, is the patience level, right? Are you seeing like I mean, as I get older, I won't speak for you, my patience level isn't as good as prior. And what I'm saying is a lot of people, whether it's private equity or real estate, they want to like if it doesn't work in 3 months, that means there's something wrong. So we could talk about the private equity side, right? What is that length? And we could use, the coffee end of it or whatever, or any of the
Yeah.
projects you raise. What does like that timeline look like, right? And the second end of it, I'm going to ask is, well, how do you survive? Because you still have bills on that end of it. So how do you survive depending on the length? So we could pick any form of capital you raise for, want to pick the coffee one, you could pick any, like how long did that take and what's that look like?
Yeah. So speaking of patience, I would say the private equity investor has significantly more patience than your average stock
Yeah.
investor, I would say, just because of the time frames of the duration that most fund managers require to deliver, right? So the coffee fund, as an example, 5-year projections, 3 to 5 years out is kind of like what we were anticipating for people. If you look at other very popular syndicated asset classes like multifamily, 5 years,
Mhm.
very kind of standard sort of holding period.
Yep.
You have certain investment strategies that are shorter than that, but really 3, 5,
Yeah.
7 in certain cases, right?
Yeah.
So we call
Versus,
that.
like if they're doing single family residential, not syndication, right? Let's talk the difference of how quick, if it's bought right, how the return on
Yeah.
capital,
I
like
mean,
what,
in the case of what you
like
guys
the
do before you even close,
yeah,
right?
yeah, exactly, right. So like the risk level, the answer is yes to both, right? I always tell
Yeah.
people you got to figure out what you like. For me, you guys already know that's been listening in and that watch me, like, and Alexa will tell you, I'm a control freak. I'm starting to get a little bit better at it, and so I'm an active investor. So I'm actually buying and flipping, wholesale, all that other stuff because I want to have control of it. I am in a couple of projects that are passive, and I want to throw up, is what I'm going to tell you, right? Like, I don't know how else to say it, is everything is good until it's good, and then it's not,
Yeah.
right? And it just drives me it's something I learned about myself, is what I'm going to say, is that I'd rather bet on myself, generally speaking, or if I'm in a project, I want to be a GP, right? A general partner versus a limited, and have some say. And again, it goes right into my control issues, and I'm only investing things that I understand. That was the big thing versus I'm going to admit, like, I have that shiny object syndrome, without a doubt. Like, hey, that sounds really cool. So I will invest in some of those things. So let me rephrase that. It won't be much money, number one. And I look at it almost like the venture capitalist, like, hey, if it goes and makes no money and I lose it, that's okay. Like I'm already, versus, hey, this is my life savings on that end of it. So like since you're around so many different kind of investors, from the high net worth, even to like I'm going to call them regular investors, right? On that end of it, do you want to kind of talk about like what
Yeah,
you're seeing on risk level, or how do you
definitely.
adapt to that?
What you mentioned about if I lose this, it will be okay is a very common. I mean, of course, the investors do their diligence. They ask all
Yeah,
the
yeah,
good questions. They look at the documents. They assess
yeah,
risk. But when they deploy, they're like, look, I understand that that's why they require them to be accredited, right? They need to
yeah,
understand the risk involved. And even though the projections on paper for some of these deals look so much better than public markets, right? Like you look at a multiple, you're like, okay, if I invest in this apartment building in Texas with these really smart guys, I'll double my money in 5 years.
yeah,
And then they could show me on a piece of paper, like on a pro forma, where I'm going to get my
yeah,
money back. Like you don't have that in public markets, right? In like stocks and bonds or really any really asset class
yeah,
where people are telling you you'll double the next time. The
yeah,
reality is that subject, and of course they tell you this too in their disclosures,
yeah,
it's subject to so many factors that could move those projections and things that include like complete loss you know, in
I
certain
mean, like,
cases.
you know, without being talking into politics, right? Like the tariffs, right? So if you're getting, you know, they're talking about lumber. Like I'm interested to see what's going to happen. You know, a lot of impact windows come out of China. So I'm just curious to see if you're doing spec homes or you budgeted X amount for this on a project and now it's, you know, 2 or 3X and you invested in a syndication and now you get that capital raise call, right? Like, hey, Nish, I got some bad news for you. Or a capital call, I should say, and say, you know what, we're asking our investors X. We need this much amount more money to do those things. So yeah, if like what you're saying, like the best practices of what you're seeing.
Yeah, I mean, in terms of best practices, like because a lot of my investors were very experienced in this asset class, not just with me and my fund, but we were one of many that they were
Yeah,
invested in many cases. So what the investors often do is uh, they diversify across asset classes first off. So the high net worth investor has cash. He often has bonds and stocks, real estate, and private equity. And then a lot of these guys, they actually don't have stocks and bonds because they don't believe in it. And it's
yeah,
just cash, business interest, private equity, and real estate. A lot of the guys were like that, where they weren't in public. But even in their private equity allocation, it's not the whole portfolio because it's so illiquid, right? It's like you have to
yeah,
live on the money, right? So what people would do that were like heavy in it is they would have one investor told me the best, like is the way he had it. He has like 20 different positions, and you know how they mature every call it 5 years on average. You've heard of a CD ladder, right? Where you
yeah,
have a CD that matures in 3 months and then one in
yeah,
6 and one in 12 and one in a year. These
yeah,
guys, they're investing in they're deploying capital every year, right? In multiple deals, a small portion of their portfolio, albeit, right? But then the following year, they're getting a liquidity event from a deal they invested in 4 years ago. And then the following year, it's from a deal they invested in 2 years ago. And then, so they're always getting liquidity, right? So,
yeah,
and that's only possible because this guy's diversified in 20 different deals, right? Not everyone has 20 deals in front of them, of course, right? But one way that investors get around it is doing just that, right? Is they'll
yeah,
diversify not only across asset classes but time frames. So then they're making a ladder from these private deals. It's an interesting way to go about it. Also, people don't put a majority of their net worth in any deal or even in any asset class, right? So like an investor with $10 million of net worth may have 2 or 3 million in private equity, right? And then probably the rest would be in more traditional assets. Just using that as an example, right? 2 to 3 million might sound like a lot, but for someone
yeah,
worth $10 million, you know, it's a
yeah,
good sizable
absolutely.
allocation, right?
Yeah, so Jim's asking the question like, where do you meet these high net worth people?
uh, Well, it's important to know that I guess we're still talking about private equity, high net worth people, right? Because I told you I
Yeah,
pivoted
or it could
into,
be both. It could be any
yeah.
because I know
So what's so
you're
exciting
doing.
about being in luxury residential in your market where you live, right? Maybe not everyone lives in my market, they live in their market.
Yeah,
Everybody is a client because
yeah,
everybody buys and sells in your market, right? You know, if you're in a high-end area and average price point is 1.5 million plus in a subdivision, that those are all high net worth people, right? So like, where do you meet those people? We could start there. I can go back
yeah,
to the private equity, where you meet them, but the high net worth in your neighborhood, they're there in your community. You need to go to the places where they are, where they socialize, become friends with them in some ways, or become friends with their friend and get introduced, right? And you know, it's
I
probably
mean, are you doing a lot of networking? I'm asking for the audience. I know what you do, but like, how much networking time would you say you spend? I don't know, weekly. Like plans.
it
I know
should be
there's the
more.
organic, right? Like
It
there's the
should be more.
organic.
Yeah,
Yeah,
it should be more. A lot of it's organic, where you know, I'll give you an example. Like you have a friend that is a member of a yacht club, and then you become friendly with that person and they can invite you to that said yacht club, and then maybe they can introduce you to some people there, right? You can do the insert any private club here to that equation, right? You put a
yeah.
golf club, nice restaurant or bar where high-end.
So wait, Josh, are you inviting me to your yacht? Is that what I heard?
I'm just suggesting it. You might want to be invited though. It's a good idea, right? So
I'm sorry. I mean, you're inviting myself and Alexa. Sorry, Alexa. I got you too. So, You guys
But
all
they're,
heard
but
this
they're
on the
steamed, right?
recording. He said, all I heard was, I'm going to get invited to the yacht, and then we'll just edit the rest of that out, that no part.
Well, there's things that happen throughout the year, right? So there's a boat show every year in Fort Lauderdale, right? You know this, you
Yeah.
live here, right? It attracts some of the wealthiest people
Yeah.
in the world to our area, right? Those people are going places, right? They're going out to
Yep.
eat. They're going to little private parties with people, right? They're staying at Airbnbs. They're renting property, right? So
Yeah.
often I meet people from my particular listings, for example,
Yeah.
right? So if you're marketing a high-end property in a community, most often people come represented with an agent, right? 9 times out of 10. But often you get calls or introductions from people who are like, hey, I saw your listing. I'm Mr. High Net Worth here and I want more information. Oh, it's not for me. Oh, but you sound like a smart person. And now all of a sudden John Doe is in your network, right? Because
Yeah.
you had a means but to attract him by having a product that he was interested in, right? That's one way. That isn't he was introduced to me by somebody or I went to some club, right?
Yeah. Yeah.
In the real
And
estate.
you know what's funny is like I'm a big believer in that, right? You need to be around high net worth people in general. Luckily, I live in Las Olas, and some of my favorite restaurants, whether it's Lobster Bar or Eddie V's, and one of the managers, which I thought was really interesting, and we're talking about the boat show. The Fort Lauderdale Boat Show is probably the biggest one in the world, I think they say. And if you haven't been to it, you definitely want to go to it. And at Eddie V's, it was really interesting what's happening. Not only were they doing deals like in the private room to buy the $5-10 million yacht. He said now he's he told me, which I thought was really interesting. They're buying planes. They're plane brokers coming in during the boat show. So people are flying in, buying a plane and a yacht on that end of it, and to
Yeah.
be in that room makes a big difference.
And where are they parking that yacht?
Yep, exactly. Right on their house on the water.
On their house on the water, right? So yeah, they're
I,
all
I,
there. All those
you,
guys are there trying to pick up on that. You
you,
wouldn't be the only yacht broker or real estate broker in the room, put it that way.
Yeah, you know
But
what's funny? Actually, there was a girl that she does luxury too that I'm friends with, and I was laughing because he bought a house, right? And it was on the water, and he could, let's see, to park the yacht, like I think the dock was only 70, or whatever, it could only hold a 70-foot yacht, and his yacht was like 90. So whoever it was, they miscalculated it.
oh,
So here's the best part was, right. So I was like, she's telling me this story, and she goes, "Well, here's the best part." He's like, he's just gonna buy another house with a bigger yacht spot. I was like, that's pretty interesting, right? I was like, and she's like, I don't know if he's gonna keep the other one or not, or maybe he'll give it to me to
yeah.
list. So it's just a funny. It's funny how that happens, is what I'm trying to get to, right?
Yeah. And then, a lot of it comes over time, right? There's no like, hey, let me flip a switch and all of a sudden I have 100 high net worth people in my network. Like it doesn't work that way, right? Like you meet one person, you build their trust and their rapport. They become more than a client. They could become a friend before you know it. They know others, right? And the circle, right?
Yeah.
If you deliver value to people and you show them that you really care about them genuinely and that you will go above and beyond for them in ways in which other people won't, you really stand out to them. And that's whatever industry you're in. That's not just for real
I
estate
mean,
agents.
for all the people, right? Like, and I see it all the time. I have a lot of friends that are luxury brokers. Do what you do. How do you differentiate yourself versus like, I want to say there's literally, gosh, I want to say thousands of luxury,
Thousands. Yeah.
yeah, realtors on that end of it. So how did you, like, what is the difference, obviously, of the private equity background, and how do you showcase that? Because like you got to use digital. Like what steps do you take is what I'm getting at.
Yeah. Well, it really starts with their experience on your first interaction with them, right? So
Mhm.
if it's a phone call or if it's an email, I can assure you, well, I could say, I like to think I have a very quick response time to people and that give them professional courtesy and I am polite with them. I ask them genuine questions about themselves and show interest in them and what matters to them. And when it goes to like responding to emails and texts, I do so in a very prompt, professional manner. High net worth clients, they want really like a concierge type experience. It's very personalized and high touch. And I learned that from banking and private equity, of course, right? And there's an art to it, right? Because
I was gonna say they're a little bit needy, but yeah,
they're
you're
very
just nicer than I
needy.
am.
They're very needy, of course, and rightfully so.
Yeah,
Some more than others.
yeah,
Surprisingly, the ones that are wealthier are often less needy. It's funny how that works, but
yeah.
the people on like the lower end of the spectrum on
Yeah, yeah,
wealth.
and you know what's funny? Like, actually, I'm gonna jump in on that question too, right? Because I know you've probably taken, or with your group, or even with Carla, low, quote unquote, lower end clients,
Of course,
is
yeah.
higher end. Like, what is like? Is it easier to sell a $3 million house? Like, what's the difference, and what are you seeing generally by work?
Yeah,
And again, these are generalizations, guys.
yeah,
I'm asking Josh his personal experience, so I'm
yeah.
not gonna say everyone's the same in that bucket.
So there's quite a bit of softness in the market right now in general. A lot of opportunities for buyers across the board in South Florida, I'm talking about
Correct.
specifically.
What price range are you gonna would you
Um,
say that you're seeing? That's
yeah, so stuff like 1.2 and under, that's well priced is like moving, right? Of
yeah,
course, like the high end, like if there's a $3 million listing that it's like a $4 million house, of course that'll move quickly, right? If someone's like
yeah,
selling it. But the end of the market, like, it is still like sort of luxury, depending if some of them are distressed, but like 700 to like 1.2 in nice areas of the city, that
yeah.
stuff's moving, right? When it's a nice product. From what we're seeing, the more expensive, like $2-3 million homes are sitting on the market a lot longer. In general, houses are sitting
Yeah, yeah.
a bit
I'm
longer.
saying the
Even
same
in the
thing.
700 to 1.2, they're sitting on the market longer. But
I'm seeing like from my other friends also like the 1.2 or to 5 million. It's just not as like it's just kind of everyone's kind of waiting
yeah, those
around. Like
people
I don't
can
know what else
afford
to
to
say,
wait
right?
too.
Like they're just
Yeah.
like, well, I think they're gonna, and I even on the low end, like we still deal with some of these sellers. They think it's 2022, right?
Yeah, you really have to educate people and show them the facts is what it comes, as you know. But yeah, it's the stuff from 1.2 to 5 million, it's not housing necessity stock,
Yeah,
right? That's like it's a very luxury product. Those people can afford to be selective, not only on what they buy, but where they buy, because they all don't work or they work from home, you
yeah.
know, people that are that are buying that stuff.
Just like us, right? Yeah, absolutely. Are
So
you seeing more cash or finance offers
cash,
in general? Right? They're
more
moving cash.
cash,
We're
right?
seeing the same thing. Yeah,
Yeah.
I was gonna say I've noticed a lot of cash sitting on the sidelines. Right now, even for me, it's like people are trying to throw money at me and like, hey, I'll give you this. And I'm like, no, I'm good. Because they're looking for placement. And obviously what's happening with the stock market, if you got a big 401k one day, you're eating steak. The next day you feel like you gotta eat ramen noodles,
I
right? Like
know, it's
it's just like, oh my God,
crazy how
what's
that works,
happening
right? I know.
on that end of it? So yeah, I'm seeing the same thing. Obviously we're dealing with lower end properties. They're moving really quick. Some of the webinars that we've done recently, what you probably may or may not know is that there's over 10,000 pre-foreclosures in Broward County. We've seen almost a 25% increase since December. So there are opportunities out there. Only 2 to 3% are for sale, being listed on the property, listed for sale with agents. And more than 80% of them have equity, right? So all the prices have gone up. They're not paying their mortgage. Because, again, if you're a W-2 employee, you got set money. You're not going to magically come up with 20 or 30 grand to reinstate your mortgage. They're not going to do a loan modification, right? Generally speaking, because they have to qualify again and at the higher rate. So if they're at 3.5%, 4%, they're going to be at 7%. And the bank really has no incentive, right? They want to go out there and, redeploy that money at a higher rate is what we're seeing too. Gabriel's asking, what suggestions do you have for someone starting from scratch with zero experience in real estate?
Well, I will start by saying Anish has great resources for the BPM RIA, like free webinars.
All right, we're done with the webinar. That was perfect.
No, but seriously, and like there's tons of free content out there to just kind of learn basics at least, right? So if you're starting from nothing, try and educate yourself with the basics. Get on some webinars, read some articles,
Yeah,
find a book
network.
on some topic that you like in real estate. I started with like a house flipping book and like a rental property book that I read, and that really it gets your mind kind of stimulating, right? Thinking about things that you weren't aware of. So get yourself a basic book, listen to some podcasts from different people,
Yeah.
go on some webinars, read
I
some.
would say the same thing. Also, networking is massive. And also try to pick a niche. Not a niche. Pick a
Yeah.
niche. What I mean by that is everyone, like if I meet, and I was like that. So I'm going to start with myself on that before I pick on everyone else. Is that, hey, Monday I'm going to, wholesale house. Tuesday I'm going to do creative financing. Wednesday I'm going to buy a strip mall. Thursday I'm going to, like all these things. I'm going to buy tax deeds. And
Oh,
it's just so wide
I've
that
been in the same issue. You really have to niche down to what you're doing in business and in life. Like
I,
even
and
you need
the other thing, Gabriel, I would tell you also is I see a lot of people, and I get it. You want to buy a strip mall, you want to buy multifamily, and you have no capital, right? Like they're going to know in 1 second if you're talking to a broker to sell a multifamily. In 1 second, they're going to know that you have no experience, and they're going to hang. I just hate to say that. There's just too many people that want some really big things, and they want to run a marathon, right? I always tell people, I said maybe you should go out for a walk first, and that's real estate's the long game on that end of it, and depending on where you're at also, and I kind of touched on it too, is I have a very supportive family. Sometimes, right, when I left corporate America and I was trying this, and I went from making millions to losing everything, my dad specifically said, you tried it your way, you should go back to banking, right? And as a good Indian son, I didn't listen to him, slept on my cousin's couch, and the rest is history, right? And then he always jokes about it, is like, I knew you could do it. And I was like, Dad, I don't think you remember. So one of the things, if I could go back in time, I wish I would have recorded him saying those things and then play it for him. So for all the doubters, I'm not, by the way, legally, you shouldn't be recording somebody without their knowledge. I'll have to give my own disclaimer on that end of it. So sometimes it's just the people in your life, they might not see that. And you also have to see where they are, right? My dad's a financial analyst, worked at the same company for 30 years, and my mom's an accountant, right? So they never were entrepreneurs. So for them, that was for other people, or they didn't see it that same way. So sometimes it could be a spouse, a family member, all the above. On the other hand, my wife was, when I lost everything, she's like, "You could do this." I always joke about it. In the stock world, I was like a penny stock, and she's like, "Hey, this thing's gonna hit, right?" So I had that support from her to say, "Hey, we could do this." So sometimes, it just depends where you're at, and if you don't get that support at home, that's why you want to go to networking groups. You want to be with other mind, like people that are entrepreneurs and business. And a big thing for me is like I have 3 mentors. So it doesn't matter how well you do, you still need mentors out there. And the key is like, and Carl Fisher is one of them. If you guys have come to Camel Plan, one of the things about the self-directed iris, which I love, I remember going to a couple of his workshops on National Geographic Cruise, and it was the year after, and people were asking the same questions. And I raised my hand, I go, Carl, I did everything you said. Now what? And what I'm going to tell you is like if you're around experienced, knowledgeable people and they give you some advice and you take action, they will literally give you the keys to the castle. It's just really important. There's too many people out there that, hey, should I go do this? You give them the advice and then they don't do anything with it. Right. And it's frustrating on the mentor side also. So I think that's always important too, Gabriel. Good question on that. Actually, like let's talk about mentors. What about, I guess, do you have mentors or have you had mentors or masterminds, that something that you got out of that was like a aha moment?
Yeah. Yeah, I will say, from an entrepreneurial perspective, I highly looked up to the partner at the coffee private equity firm, one of the two
Yeah.
partners that I worked for. Just from a business perspective, like everything he did and every decision he made, I was very really tried to like peel the onion and like try and understand it. It just made so much sense. I was just admired it so much. So a lot of leadership and entrepreneurial things, I consider it. It wasn't a formal mentorship because I was a director underneath him as a partner, but I really felt like I was being mentored in business and entrepreneurship working under him for 3.5 years. So that
What
was
about like even speaking on the private equity and we get to, even on the real estate side, like how many hours, right? Let's talk about time. Like what did that look like on the private equity world, and what does it look like for you now on the real estate side? On
yeah.
how many
Uh,
hours, if you would have to say, and if it's less if you need to increase those hours because Carla's listening, your wife, we could do that. So whatever that number is, we'll divide by two. No, I'm kidding.
Uh, I like to think that I never stop working now, but mentally I feel like I'm never working, if that makes
Got it.
sense, right? Like I'm enjoying so much what I'm doing that I want to keep working, right?
Yeah.
So like her and I were up at like 10 p.m. last night, like doing emails and contracts. We're like, oh, the baby's asleep. Let's keep working, right? And it's like we're so excited to get on the computer at 10 o'clock at night. I was not really doing that when I was at private equity. I was like working like really. It was also remote, like I told you, and
Yeah.
we were a boutique firm. It wasn't like BlackRock, right?
Yeah.
So I mean, we the hours were a little bit different. Yeah, I didn't really work weekends, but I was working all day. I was kind of glued to my phone, my computer, and my laptop from like 8 a.m. to like 6, like, but I really could, but I felt like glued to it. Like the setup that we're in now, like I was like in here, I was answering emails, I was on Zoom
Yeah.
calls, getting sciatica. Now I'm like going out, walking in the sun, taking like AirPod phone calls or like driving to the beach. It's different. I'm working, but
Yeah.
it's more fluid and it's completely on my own terms. So being an entrepreneur and a business owner is so rewarding in the sense that you work more hours, but the hours are more rewarding and they're on your own terms. Like for example, yesterday, it's a Wednesday. My wife and I don't send our son to school Wednesday. We keep him home because I work on the weekends a lot. We took him to like Butterfly World and we had a lunch together, on a Wednesday when everybody's at work, right? So it's cool
Yeah.
to be able to do things like on your own terms. Of course, you can take vacation and time off, but that's still on
Sure.
those terms, right? When
Well,
you're
I mean, it's important because a lot of, like it's that balance, right? And so, what I mean, you're a successful entrepreneur and myself. What I'm going to tell you in the beginning, there was no balance when you're building. It's just
ah,
the way it is. I know a lot of people, again, I'm in a lot of masterminds. We teach a lot of things. Like you have to put that grind and hustle in unless you have unlimited cash. Like, let me rephrase that, right? So if you're, you got extra money or you got enough passive income that you can hire a team right away, fair enough. When you're a solo entrepreneur and you don't have all that and you're trying to gain, same thing. I was out there hustling, right? Working, whether it's mornings, evenings, weekends, like, yeah. And when I lost everything, I still remember I was like, please, as I was starting to build the RIA and my business, I was like, man, I can't believe I'm putting so much hours. And I remember when I lost everything, I was like, I wish the phone would ring to make money, right? And so then I'm like very grateful about it too. So like the balance happens. I just see a lot of, I hate to say it with social media, everyone makes everything look so easy. And I'll leave
yeah.
it at that. And if you want, if you want to comment on that, I'll let you, what you see as the entrepreneur lifestyle of what's happening.
Yeah, it's anything but easy, but it's immensely rewarding, emotionally, financially, in every way. It's also, but the rough times are rough,
Yeah.
right? It's the beginning of anything it's a challenge, right? And you don't have that cushion like when you're starting a new job and they're like, hey, you're learning for the first 6 months, but we'll give you 100 grand a year. Don't worry
Yeah,
about it, or whatever your entry level salary is,
yeah,
or whatever, insert
yeah,
pay
yeah,
here. You're learning, it's okay. You'll get paid from the beginning, right? Before you're producing anything. But when you start something from the beginning, you're burning money. Not only are you spending time, but you're actually losing money because you're investing in your business, like financially. It depends on the
yeah.
business, right? But
Absolutely.
there's costs that go into it, and it takes time to get clients for any company. It
Yeah,
takes time for those client relationships to actually equal what you were making before at your job. All right. Like, I
yeah,
have a really good friend of mine. He's a stayed in banking and works down in Miami. And he keeps climbing his way up. He's making over 500,000 a year, W-2. He's crushing it, and he's
yeah,
miserable.
yeah. And then after taxes and his
I shouldn't
net's
say miserable. I
probably
shouldn't say
three.
miserable, but he's
Yeah.
he's in a position where he's questioning what he's doing and what his purpose is,
I
right?
hope he's not. I hope he's not listening in. So
I
if
hope not. Let me look at the chat and the participant.
you're
I gave him the link, but
like, you son
he's
of a
not
gun.
listening. So it's a safe zone for him. No name calling. But him and I have been talking about him becoming an entrepreneur, right? And going independent,
Yeah,
becoming an advisor. And then I was explaining, and he fully understands. He's like, well, I'm giving up the 500,000, right? I'm like,
yeah,
yeah, but you'll make more than that later. Like, you're not going to make it in year one. That's okay.
yeah. Or
Like,
even year three, but
or
like now
even
you get
year
your
three or
time back.
four, right? It depends on the company, but there's a path to make more, right? Like, by doing things right. Like, we all know, like, for those that are unfamiliar with growing a book of business as a financial advisor, you can get paid on a percentage of assets under management. It's very scalable. The
Yeah.
top advisors are making millions of dollars a year in management fees. The guys that are doing it right and doing well by their clients. So.
Well, even like the W-2 guys, right? Like, I mean, I work with a lot of the NFL guys. They're making millions. And after Uncle Sam, right, W-2, with what they're netting is unbelievably different, right? Sometimes it's almost half or a little more than half that they're getting versus being self-employed on a business and you're structuring it right. You could actually quote unquote be making 400,000. We'll use those numbers, and you're making more money net versus
That's 100% true.
on that end of it, whether it's cost segregation, you're buying real estate, all the above. And I always talk about the net, what goes in my pocket. I'm never about the gross. I'm like, that's great. And how much do I get to keep? And I think that's always really important also. And to get your time back, I think there's a couple of big points about, if you're not happy at that end of it, or, like I like that you're able to take Wednesdays off and spend time with your son. Like, how many people would love that? Give me a yeah, buddy, in the chat if you would love to be able to take an extra day off to spend with your kids. Maybe you don't like your kids. I shouldn't always say that, right?
No, but it's a wonderful thing. And, you know, eh, perhaps there's a Wednesday where I have a meeting and something important, take Thursday off.
Yeah, yeah.
It is what it is.
It's so the funny part is, like, as then you get to the next level, and then you want to scale like where we're at. Also, I was just sharing with Josh before we got on the webinar, is that Alexa told me, yeah, this past week, or we've known that we've done well over 90 events last year. She's like, we're on pace to doing over 100 events this year, and our team is only Alexa, who runs everything, myself, and three VAs. And the key to having systems and vision, right, is important as a company. And some of the things that we do teach, even in our mastermind group, is about vision, systems, and people. And the idea is, as an owner, you have to have the vision. Again, I'm all about outsourcing everything. The only thing you can't outsource is vision. So imagine you have the right vision and the right people and no systems, right? It's going to be chaotic on that. Well, what happens if you have the right system, the right people, and you have no vision as the owner, right? They don't know what to do. And then the last is, right, you have vision and the right system, and you have all the wrong people in the seat. So, like, you need that combination. So the first step I would say is to make money, right? Keep it legally. And then if you want to scale, you got to start building out the systems. And even for myself, the growth end of certain things, I'm like, oh, I don't want to hire that person because I think of it as an expense versus that person's going to make me X amount more money
Yeah.
versus, versus, like as you're building out your team or what happens on that end of it. So and I know you're in the middle, you and Carla are in the middle of like scaling your business. Like, what are some of the challenges that you're seeing? Or, again, this is, guys, like Josh has no idea what I'm going to ask him on anything. So I
Yeah.
am putting him on the spot. So what are you seeing, or like at the mental end of it, or, on that part of it, I would say.
So her and I have been talking this week about a VA and where we need help in the business and what we think would be most sensible to task somebody with. We just put a job post out for it. We're looking to hire someone, but uh, the challenges now are we have a big vision, right? And we have a variety of initiatives that we want to execute on, and they start piling basically, right? When you have so much of a vision, like you start piling things that you want to do, but if it's a solo operation, as you guys see, right, like a two-person
Yeah,
operation without VAs or without support,
yeah,
it becomes
yeah,
very overwhelming, right? And less work-life balance. It's actually
yeah,
often less efficient if you let somebody else do it, something that your time could be better used somewhere else, right? I'll give you an example. Like, let's say I'm trying to do a bunch of tasks that a VA person could do in theory, right? Let's say it's some data entry, cleaning up the CRM, designing some social media posts, putting our compliance folders in order, non-money making activities, right? But that are essential to the company, right?
correct.
Carla and I find ourselves doing those, right? Obviously, right? Who's going to do it?
Yeah, yeah, yeah,
But all the time that I'm spending on folders and compliance and cleaning up the
yeah.
CRM and doing this is less time of me talking with people or networking. You asked me
Making
before,
money.
oh, how many networking events are you
Yeah,
going to? I'm
yeah.
like, I'm
Money
not. I'm
making
doing compliance
activities.
later, right? I'm not thinking,
Yeah.
I'm thinking, oh, what the
You're
thing.
still a banker. It doesn't go
Yeah.
away.
I can't get it out of my head. I love compliance so much. So, but it's hard to outsource. I got to let it go, right? So, but what we're finding the challenges are like, okay, well, how should we allocate our time the best, right? Because obviously the goal is like, I have my revenue projections for the year or my goals.
Yeah,
I'm like, I could double these goals. Why can't I double these goals and try and hit those goals? And I'm like, oh, but if I double these goals, where am I going to get my time to get the business that'll come in to be able to hit the revenue figures that we want to hit, right? Like,
yeah,
oh, well, I need to delegate. So we're hitting this point where we are feeling like for us to take our business to the next level and grow, we need to bring on talent and delegate it effectively. So that's kind of a good growing pain that we're having now, where we're fortunate to be in a position where business has been picking up this year. We only started Ziegelbaum Group at location like coming on a year ago.
yeah,
And this year has been just really kind of accelerating in activity. So we're like, okay, I think it's time to bring someone. So we're trying to fill in those gaps now in the company from an operational perspective on social compliance, CRM,
yeah,
get systems in place, like to what you're talking about. You said you have like really tight systems and really,
yeah,
I know I'm on them, the email blasts and things like that. So we want to build out our email blasts and our systems and tighten up the CRM. And it becomes overwhelming when we have so much other work on our plate, right?
yeah,
So it is so important to get the right people involved. And you really can't do everything yourself.
yeah.
At a
That,
point,
and that's the challenge, right? Everyone always thinks they can. They want. I started with I'm a control freak, right? How many guys are control freaks? Put in the chat, right? And if you're not, or you're like, they probably don't want to even put it in the chat because they're like, you can't control me and tell me to put it in the chat. So if you're one of those, put that in the chat too, right? And again, it is super important. What I always like, one of my mentors, Marshall Silver, he always talks about, hey, it's going to be crap 1.0. You're going to review it, you're going to fix it, you're going to revise it, all the above. Then it's going to be crap 2.0, and the key is no one else is going to notice. Right. So we're always like, as a perfectionist, that was the other thing. I want everything to be perfect. And the answer is by the time it's perfect, everything already changed. Right? So like, what I'm trying to tell you is, it's those little, those small commitments lead to big ones, is what you're getting at. So don't, like, Josh is very successful. You know, we're doing well at BPM RIA, and we still have these challenges. The reason I was bringing that up because a lot of people are like, man, you have it all figured out. I literally laugh. I say I'm a work in progress at most, right? There's a lot of things that that I need to learn, or I don't feel like, hey, we're inefficient, and it's those baby steps on that. And I know Alexa is on here too. She, her control issues, right? She didn't want the VAs to do all the stuff, right? And even internally, like I've told her this, and the VAs, like they're committed to us if you take away tasks for whatever reason they think they're not good enough. Instead, we're realizing as a company that, for us, like, hey, Alexa, you should be doing that. You should be posting events. That is a VA job. And so for your entrepreneurs and you're making money, I think one of the key exercise I did was I figured out what my per hour is, right? So if your per hour is even $50 an hour, $100 an hour, whatever that looks like, are you doing jobs, right, that are $5 an hour? And like exactly what you're talking about, why are you doing the CRM stuff when you're a master networker, that really generates money? And as entrepreneurs, it's a really, I don't know, like I don't even do to-do lists anymore because I always got frustrated because that list was like
This
like it
keeps
kept
growing.
growing, and I felt like nothing got accomplished. So one of the things that I've done personally is um, every night my goal is for the next day to do three things, and I add a personal one in there, right? Like that's okay too. It doesn't have to be work stuff. Like it might be like, and I'll give you the perfect example was like I'd forget to make a doctor's appointment. I never got around to it because I had all this other stuff to do. And now it's already after 5:30 or 6. I'm like, oh, now they're not going to be open or this end of it, right? So like I'll put that list in because then, hey, as long as I get these three things done, of course there'll be stuff that comes in throughout the day. I felt like there was like I accomplished something because as an entrepreneur, there were many times I was like, man, I didn't, I feel like got nothing done today. And so I think that was, I think that's some of the things that we have to work on, especially as, working from home. You don't really deal with people unless you're with your clients. It's really easy to get caught in your head of what's happening in your life. So I do have a question. How important is branding and how to build it to differentiate yourself from other agents, investors? So what are you using to brand you guys? Or how do you go about branding?
Yeah, so I used a marketing agency to design our website. We assisted in that, but we use, I'll give them a shout out. We use the real estate marketing group for our website hosting. So we host eaglemountaingroup.com through them. It's a luxury MLS integrated experience. So it has all the active listings and everything. It all feeds into the site. So we have pretty strong branding there. They also assist us with logo creation. So that's a Trem, T-R-E-M, that we run that through. We also have a web presence through them through Google Ads. So we attract buyers into our markets, into areas that we market to come to
Let me
our
ask you
website.
about the Google ads, like the pay-per-clicks. Are you seeing, I mean, you're in such a competitive industry. We were doing on the buying houses end of it. It was costing me so much money per lead. Again, we did it for 6 months. So any kind of marketing, I would always say at least 6 months.
At
Don't do it
least
1 month.
I've
Yeah,
been running
minimum.
the ads for 9. We just had like our first like closing that wasn't a rental from it. And then we
Right.
have a referral from that that's soon to be closing. And then I have another one that's going to be closing. So we're going to be, I guess you can call it like doubling the RO, like the investment, but it's coming at the very end of the year. So it's been a money pit basically, right?
Yeah,
So
yeah.
longer,
That's
right?
what I was curious about the
But
nine
you need a
months.
brand to get out there on Google. So how do we design the brand? So my partner Carla handles marketing and compliance at our firm. So we use different tools such as Canva, different ways in which we could design like print media. We use a stabilizer for video content creation, microphone, so we have crisp quality audio. When we position properties, we use a professional photographer. We do luxury photos. So it's very important. The branding of every property that we present is luxury type branding. It's elevated, it's bright, wide angle. Anything from the print to digital, it's all very consistent.
Yeah.
So we do our own in-house designing, and then we leverage professional photographers, videographers, and marketing agencies.
Okay, yeah, absolutely. I mean, it's going to be a little sore subject, but I know I'm going to bring it up. NAR, right? Obviously, the changes that we've seen. I guess it's been since October, November, I
Yeah.
forgot when
Yeah.
everything really went into effect. What are you seeing, obviously, on the compensation side? Um, like, are you working with a lot of buyers and you're seeing other agents still give compensation, or are you having that conversation up front saying, listen, if they don't pay, you're going to pay me? Like, what does that look like?
Yeah. Yeah. There's an educational moment in the beginning, right? So in
Yeah,
order to show, I mean, you're aware of this, but for those that are listening who may not be, in order to show a property to a buyer and take them
yeah,
on a tour, even to just as a buyer's agent, it's not even your listing, like someone calls you to look at a house. You
yeah,
need to have a written agreement with them in order to show them property, right? And that written agreement needs to explain how you get paid. Now, it's no longer legally required that a seller pay compensation. That's that whole NAR
correct.
settlement was about, right? Where it's negotiable, basically, and the seller is not obligated. What am I actually seeing in the market? Sellers are paying or they're not selling, basically,
Yeah,
right?
yeah,
That's still kind of what we're seeing and what
yeah,
I'm recommending to my sellers. Um,
agreed.
so, the compensation, it ranges anywhere from 2 to 3% on average for a seller's broker and 2 to 3% for a buyer's broker. I would call 3 on the high end. It's compressing quite a bit. It's been on a trend of compressing, not since the
Yeah,
NAR settlement, but before that, where we're starting to see 2 and 2.5 in the market a bit more often. I would call the average 2.5.
yeah.
For that's
What I've been seeing in general is the experience, realtors like you and Carla and some of the other people I know, they're still doing pretty well. The challenge is all the newbies that, hey, I always joke about it. As a realtor, when I was doing retail real estate, they're like, Anish, your job's so easy. You just drive a person to a place, you write up some paperwork, and you make some big fat money. I was like, and they're like, or hey, Josh, you're really friendly. You should get your real estate license, right? And there's a lot of people that got into the industry, and I'm seeing a ton of people get out.
Oh yeah,
So,
it's not for the faint of heart. I mean, we have a niche in the sense that, we know how to cater to clients in a certain way. Like I like
yeah,
to consider, I'm an expert in client relationship management. That's my strong point, right? And it applies
yeah,
across industries like finance and real estate, right? And making people feel comfortable and understood, and giving them products that align with their needs, right? Listening to them. I mean, I'm sure any probably good real estate professional would tell you the same things, right? In
yeah,
terms of what makes them successful. But yeah, in terms of like the fees and the negotiation, a lot of it's negotiable, right? Like everything's negotiable. For people that are not used to negotiating or not used to written contracts, they're like, oh my God, they're like up in arms. I come
yeah,
from, I told you I raised capital for a hotel project in COVID for like a year, or tried to. I come from some pretty
yeah, yeah,
struggling times, right? So to get someone to sign a paper to show a property because it's the law, it's not really scary for me. But for
yeah,
people that have been doing it one way forever,
yeah,
of course, it's like big changes, really, really big changes for the industry, right?
yeah. I mean, the paper was a pain in the neck for me. I'll be honest. Like, but it's like everything else. You just
It's a
adapt.
pain, yeah. And then it goes also like the compensation agreement with the seller. So once you have a deal under contract, the seller needs to sign that they'll actually pay you, right? It's not just
Yeah,
the agreement with the buyer. There's a compensation agreement involved. You'll put a percentage. Sometimes they negotiate. I mean, you just have to adapt with the new norms, right? And that's what we've
yeah,
done. And, signing a contract with somebody is not concerning to me, or an agreement that explains how fees are paid. I think it's actually a good thing that things are transparent,
yeah,
um, personally. But yeah, the fees are definitely negotiable. We've run into some situations where a seller says, "Oh, we're not offering compensation," like to what you asked about, right? Very
yeah,
rarely I've seen,
yeah, yeah,
"We're not offering," or "It's negotiable," where they
yeah,
just say it's negotiable, like there's no number. And the reason why that is because like
I would start with, I'm looking for 9%.
Yeah. I mean, think about it. If a place is listed at $1 million, and if I tell you I'm offering 3%, well, what if I get an offer for 900? I mean, it's not really about the percentage. That's what I
Yeah,
explain to these people at the end of the day. It's about their net, to what you
yeah,
said before. What am I actually getting? All
yeah,
right. That's what really matters, right?
absolutely. You know what's funny, Josh? Like, I can't believe we're already out of time, if you could believe it. Like, I mean, again, like, man, those like 90 minutes go by super,
I
super
know.
quick. What I'm gonna, a couple things I saw Alexa put in the chat. If you could give us and help us out and give us a 5-star Google review. And actually, in the review, if you could say maybe one thing you learned from Josh on that end of it. Give some extra love to Josh. Otherwise, he won't come back and speak to me on that end of it. And one of the things is like we'll kind of end it with this. If What would you advise? Like it could be whether it's a business, personal. What would your advice to be anyone listening in today? So it doesn't have to be per se real estate. It could be
Yeah.
mental. It could be whatever you feel.
I would follow your intuition and the things that interest you, both personally and professionally, right? Don't just go after an industry or a shiny object because it's shiny or because other people tell you you should do it.
Yeah.
Listen to yourself and what you care about and pursue that.
Yeah, and mine is, and like these guys have been hearing me, is when I first started, I mean, again, out there hustling because I needed the money. I no longer trade time for money. And that was a massive breakthrough, which indirectly made me more money. Which is, it's just a funny thing, and you just don't realize that. And you have to get somewhere before you could get to that point too. So it's a combination of all that stuff. I know, Alexa, somebody won
This
something,
was,
right? Someone got
we
paid.
we didn't have a winner today, but I just
Oh, we
want to
didn't?
say
Oh.
how good that was. So good. Like I love this fireside chat. Seriously, thank you, Josh, for the time. And Carla for chiming in the chat and like, throwing in her 2 cents. I absolutely love that so much. She's amazing. And I hope I don't know if we've met, but I hope I get to meet her soon because she sounds like a really cool person. So good job,
Yeah.
Josh, on that.
Thank you.
Yeah. He's going to score some points at home right now. It's like, good.
Yeah.
Just
I
just sell us the money, Josh. We got
No,
you.
like, this was so productive. And like you guys know, like we do not rehearse like these questions. Like this is just, and we
Yeah.
we really want to just ask the questions that you guys are all thinking. And Nish was really on point with those questions today. Those are all the questions that I had in my head. But I hope we can do this again, because that was really
Yes.
awesome. And I hope your event in June goes fantastic because you deserve that, Josh, for real.
Yeah, and if you're an accredited investor, so I do want to let you guys know it is an invite only kind of
Okay,
stuff.
sorry.
So for the event, so you could email me or we have Josh's, I think his Instagram. We had some
Yeah.
stuff up there, his links, and you could reach out to him to get invited for accredited investors. And again, it's a newer group, and they're phenomenal. They've been doing the events here in downtown Fort Lauderdale at the Tower Club, and the amount of people I met, like our movers and shakers. And again, Josh as one of the founders has done a phenomenal job on these events too. So I want to thank you, Josh,
Thank you,
taking
Anish.
out your time, putting on your jacket, all that stuff. Now, Alexa, just let me know next time if we're doing something with Josh.
Yeah,
I'll be
I will
dressed.
let you know about the jacket next time, Nish. My bad on that. Just
Yeah,
kidding.
exactly. Josh showed me up like a true private equity guy that he is on it. And Josh, thank you so much today for sharing and just being really open and transparent about the business and your background and what to look out for you. And again, if you guys are looking for homes, right? Obviously, they are dealing with high-end clients. They're experts at luxuries, experts at negotiating. Definitely reach out, and Josh and Carla will take care of you.
Yeah.
Absolutely. Carla just included a link in the chat. I'll be sure to include that in the follow-up email that I send each and every one of you guys along with their website. And I'll put her Instagram link in there too for you guys. So thank you so
Yeah.
much.
And we'll see you Tuesday. I think Tuesday I'm back on again. Alexa's got me working my butt off
Yeah.
teaching out there. So again, I'll keep doing these webinars, the fireside chats, same thing. If you guys have topics or guests,
Let us
that
know.
you think, email us or put it on social media. Also, make sure you join our Facebook group. We're trying to get that group really moving with ideas and, networking, all the above too. So again, Josh, thank you so much for
Thank
everything.
you. It was a pleasure. We'll be in touch.
Awesome.
Thank you.
Thanks,
See you next
guys.
time.
Take care. Bye.
Bye.